Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. My name is Jenna Taubel. I am the AVP of Marketing here at First Alliance Credit Union, and joining me today is Jake Dorsch, our CFO. Jake, thank you so much for being here today. I invited Jake on the show to talk a little bit about money market accounts, but before we dive into that topic and kind of go through what they are, what's the best ways to use them, how they work, all of the details, tell us a little bit about yourself and what you love doing here at First Alliance.
Yeah, thank you, Jenna. I really appreciate the introduction. So as CFO, my main role is to lead financial strategy as well as to avoid financial risks, such as running short of liquidity, mitigating credit risk, and also controlling the financials and making sure we have money to borrow, and we're also investing our funds when necessary. So there's a lot that gets kind of involved in that, but ultimately, my department wants to protect our members and keep them safe from fraudulent attacks. We want to make sure that we're also providing services, the back ends to our members as well. So ultimately, everything still is in the service of let's go serve the underserved and let's go help our members out.
Excellent. Well, thank you so much for being here. Let's dive right into our topic. What is a money market account?
Great question. So money market account is a non-maturing deposit, kind of like a checking or savings account. However, as the name might suggest, money market account pays a higher interest rate than, say, a checking or regular shares account would, because it's tied to the market rate and the economy. So the Federal Reserve is going to increase or decrease rates. Generally speaking, FIs will then increase or decrease their money market rates in accordance to what the market is doing.
Mm-hmm. And when you say FIs, financial institutions,
Thank you.
So that means banks, credit unions, anybody who lends or has money on deposit is considered a financial institution. So you mentioned that money market accounts are similar to things like savings and checking accounts. How are they the same? How do they differ?
Well, a great question, and they're similar in that they're both non-maturity accounts, so there's no set maturity like there is with a CD. However, they differ in that money market account pays a higher interest rate and rewards you for saving and keep your funds there longer. Now, checking accounts and regular savings accounts are both very, very liquid. With a money market account, you get 6 free withdrawals over a month, and you have unlimited withdrawals beyond that, but it does come with a fee to withdraw beyond the 6 free ones you get in a month.
Mm-hmm. And let's talk a little bit about that component. When we talk about limiting withdrawals, the idea behind that and the reason that you get paid a higher interest rate alongside that is to ensure that those funds are staying with the credit union longer. And talk a little bit about why that's important for the credit union to retain those funds and why it's important that those requirements are in place on that type of an account. Whereas like something like you mentioned, a savings or a checking is more liquid. They don't have those same restrictions. Talk a little bit more about that and why that's there.
Yeah, certainly. As a credit union, we take in funds from our depositors and from our members. Ultimately, we first started because a handful of firefighters put their funds in on deposit to give a loan over to a teacher in Rochester, which is an amazing story. And for us, we do the same thing. So as we have members that have excess cash, they'll put money on deposit with us, and then we'll take that money essentially and then give out in loans to our members. So we will give out in auto loans in the form of manufactured homes, residential loans, commercial loans, and so forth. So that way one pile of members that has excess cash is essentially serving another pile of members that need cash to basically secure their financial dreams.
Perfect. Thank you for kind of digging into that, because I think a lot of times when people are looking at accounts and they see that there's these limitations and these fees involved, they just go, oh, well, that maybe doesn't sound right for me. But if you can kind of understand the why behind some of that, it helps to understand like why those parameters are in place on a specific account, especially if you're new to what money market accounts are and how they function. So I do want to talk a little bit more about interest rates with money market accounts, because like you said, they do tend to be higher. They are tied to kind of fluctuations in the market a little bit more than like a savings or a checking account rate would be. Talk a little bit about how that's a benefit for a member who is considering putting their money into a money market account.
Yeah, that's a great point. So I think each account has different major purposes. I think one major purpose of a money market account is you get to have compounding interest where you receive interest payments every single month that grows over time. And the overall goal, I think, for a money market account is sort of, in my opinion, to protect yourselves against life's great mysteries and life's great obstacles. You never know what's going to happen on any given Wednesday or Sunday, and sometimes you may have a major car issue that pops up, or maybe something happens to your shed or your house, and you need to make kind of an emergency payment. It could be for school, for instance, or medical bills. So in my opinion, I think with a money market account, because it grows continuously, you have a strong interest rate on it, but it's not quite as liquid as other things, but still more liquid than a CD. I think it's a really good account if you want to kind of save up money as an emergency fund for, when life kind of throws a curveball at you.
Yeah, that's a great point. I think emergency fund is a great place to use a money market account for all the reasons that you just said. What are some other reasons that a money market account might be a good spot for your savings?
Sure. I think it also can be a good savings tool for other purposes as well. So if you want to save up for education expenses, if you're trying to send your kid to, say, private school or, to college expenses in general, it's certainly useful for that too. It's also useful if you want to set aside funds for, say, a car purchase or other reasons. So certainly from a strategic perspective, it also is a useful tool just to save funds for, other major costs you might incur in the future.
Yeah. And one thing that we haven't really talked about yet when it comes to money market accounts is typically they have a tiered rate structure, right? So the more money you save in that account, the bigger your interest payment to that is, right? Back to into your dividends back into your account. So can you talk a little bit about how that works and a little bit about how compounding interest can help kind of build savings when it comes to a money market account?
Yeah, that's a great question. And ultimately, there are different tiers of a money market account, kind of like tax tiers in a sense. But if you have $2,000 or more, you'll be getting some level of interest. And then at First Alliance Credit Union, if you go above $20,000 in balances, you'll get a higher level of interest. So as you kind of add more and more funds to your account, or members who have more funds in their account will receive higher interest rates as a reward for them saving more money with a credit union. So to your point, it kind of rewards you to kind of save more and put more funds aside into that account.
And then, so one thing that I want to make sure that our listeners understand is the concept of compounding interest.
Yes.
So can you talk a little bit about how that works when it comes to help as a tool to help you increase your savings over time it kind of works for you to save more without actually having to do anything. So
Right.
talk a little bit about what compounding interest is and how that works.
Yeah, so that's an excellent question as well. Essentially, if you have, for instance, $10,000 in an account for easy math, and you get 2% interest, you'll basically get the first mil of interest in the first month, and then the interest on that will then accumulate over time. So for instance, the first year, if you get around $200 in interest, the next year, you'll get interest on the initial $10,000 you invested, plus the $200 or so that you added on afterwards. So you get interest on the interest as time goes on, since it compounds and accumulates on a monthly basis.
So yeah, just over time, even if you didn't add any additional funds to that account, eventually your account would continue to grow because you're getting paid interest and then interest on top of that. So that compounds on top of each other. It builds. Perfect. So one thing that I do want to talk about, you mentioned really briefly, is kind of having that minimum balance in opening a money market account. Why is that important to kind of have that minimum amount when you're starting out? Because we mentioned before, that it's important to use those, or not really important, but it's a good use case to use money markets for things like emergency funds and some of those other like large expenses. So talk a little bit about like minimum balance requirements and how that impacts your interest rate when it comes to money market accounts.
Certainly. So first off, to become a member at First Alliance Credit Union, all you need is $5 to open up a regular shares account. But the purpose of a money market account is really, as we kind of mentioned earlier, to have an emergency fund or kind of a really nice tool to save for the future, for future expenses and future financial goals. So ultimately, the minimum balance is set there in place to make sure the account is being used either as a savings tool or emergency fund. And it's also set in place to make sure that we can certainly use those deposits to make sure we can serve our other members who need cash for, say, a new home or a new business or other purposes as well. So it's kind of a dual purpose. The first purpose is to make sure the member is using it for the right reason, and also to make sure that we are able to use the funds to help our other members out too.
Perfect. And then one other thing I want to dig into as well is a little bit around how does it work to actually move money out of that money market, and how can you start to use it? Like if an emergency does come up, how do you get the money out of the account? Is it a big process? Can you do it easily? Is there a fee involved to take money out? Like, let's talk a little bit about like actually using the money that you have in that account.
Yeah, we have 6 free withdrawals a month for your money market account, and certainly you can come into one of our branches and our Ask Advisors will assist you. We have kiosks at every single branch as well, and certainly we also have individuals that will kind of pop up on the screen, help you through a transaction, since sometimes technology can be a little daunting at times, but you do get 6 free withdrawals a month, so you're more than free to come into one of our branches if you need cash for any particular reason.
Yeah, and I imagine, too, then you would, if you needed to move it into your checking account or something, you could do that via online banking or the mobile app. And then, because money market accounts don't like come with their own debit card, right? So you will have to kind of move that money around in your account to where you need it. But it wouldn't cost you anything to do that extra. The one thing you maybe want to watch out for in that case is making sure you don't fall below that minimum balance threshold, because at that point, you could end up incurring some fees, and it may be better, depending on your situation and how much money you want, it may be better to just close out that money market account, move all the funds, and then if you need to reopen a money market account later, come in and do that.
Yeah, that's exactly right. So, as Jenna just mentioned, you can move funds from one account to another account on the mobile app. So if you have a money market, a checking, and a regular shares account, you can certainly move a couple $1,000s or a couple $100s from your money market account over to a checking account if you want to make sure the funds are more liquid. And that way your debit card tied to your checking account can then spend that money electronically as well.
Yeah. So I'm going to pivot a little bit and talk about, we talked about money market accounts versus savings and checking accounts a little bit, but I do want to talk a little bit deeper about money market accounts versus CDs, because I think when you talk about, saving and storing larger amounts of money that you've saved up, even, $2,500, whatever that dollar amount is, a lot of times people are maybe debating, do I need my funds more liquid and accessible in something like a money market account, or do I want to commit to something like a CD, which has an even higher interest rate in a lot of cases than a money market account, but you can't access the funds? Talk a little bit about how to weigh those checks and balances on those two accounts.
Yeah, you bet. So a CD account will have a set standard period. So you bet. A CD has a 6-month period all up to a 10-year period where there's set standard amount of time where you can essentially tie up your funds. I'm sorry, I need to redo.
No, that's okay. Do you want me to re-ask the question?
Yeah, that'd be great.
We'll just start from there.
Let me reorganize my thoughts a bit.
Yeah, no, it's totally fine. Just trying to think how I asked that question. Okay, so I'm going to pivot the conversation a little bit here. And we talked previously about savings and checking accounts versus a money market account and some of the similarities and kind of pros and cons between using those different types of accounts. But I also want to compare money markets to CDs. And how are they the same? How are they different? And what are some of the things people should be considering if they're thinking about using one of these tools to put their savings into? Like, we've mentioned CDs, you have to kind of like tie up your money a little bit longer in some cases, but you can't get that higher interest rate. With money market accounts, it's a little bit more liquid. You still get a decent, interest rate attached to that, but how can someone maybe start to understand these two to be able to compare them and decide which tool is best for their financial goal?
Yeah, excellent question. To your point, a CD generally pays a higher interest rate than a money market account would. However, with a CD, you choose a term, which could be 6 months, it could be 2 years, it could even be as long as 10 years. and your funds are locked in for that period of time. So you do get a higher interest rate return as a result of being willing to put your funds away for that set period. However, it is going to be much less liquid than money market account, where you do get to transfer funds electronically through your mobile app, and you also are able to pull funds out in cash if you ever needed to. So ultimately, it comes down to a liquidity question. I think for an emergency fund, money markets are a superior product because of that liquidity factor. And if you're looking to do savings, it really depends what the goal is. So if you have a very set time period where you're trying to say invest in someone's education, like your kid, that could make sense for a CD. But perhaps if it's more fluid goal, like you want to buy a new vehicle, well, then maybe money market makes more sense because you want to have a little more fluidity and a little bit more versatility and ability to react to what happens around you. And a money market gives you lots more flexibility than a CD would, whereas a CD, it'll give your funds back and a strong interest rate, but only over a very set time period. So in cases where you're trying to save up for a major future expense, if you don't know what that expense is or when it will occur, a money market's more suited. However, I think if you have a very specific financial goal and a very straight timeline, then maybe a CD makes more sense.
Perfect. I think that helps kind of like really explain like the pros and cons of each, type of account really well. So thank you for diving into that. So one question that I want to talk a little bit about too is, maybe somebody has built up a little bit of savings. It's not quite enough to meet that $2,000 minimum threshold that we at least have here at First Alliance. What are some things that they can do to start to build their savings? What are some, tips and tricks that you can think of that would help them build their savings up a little faster to get to that minimum balance threshold?
Yeah, budgeting is a really important process, no matter where you are, where you're at in life, from an age perspective or what you do for a living. I think that looking at your monthly expenses and tracking how much rent will cost you and kind of estimating how much it'll cost you to go to the grocery store, go out to eat, pay for clothing, those types of things. I think budgeting is really important. So if you want to have a goal of getting over, say, $2,000 in money market account as that emergency fund, I think that budgeting and planning are both very, very important, where budgeting is going to be focusing on what are your expenses on an average week or an average month, and maybe what areas can you cut back if needed, or where can maybe work more to increase your income. And then planning is looking more further ahead and looking at your life maybe 3 months from now, 6 months from now, 10 months from now, and perhaps factoring in larger things such as tax season, or maybe Christmas season if you're going to spend lots on gift giving, and also looking ahead at what goals you want to achieve and when you want to achieve them. So I think ultimately budgeting and planning can really help you grow your checking and savings accounts to a point where you can open up a money market account and be very effective there.
Excellent. And believe it or not, we're out of time. This has been amazing. I appreciate having you here, Jake, so thank you so much. This has been Good Money Moves. Please join us next time on our next episode, and make sure that you like and subscribe so you never miss a new episode that comes out. And if you want to learn more about money market accounts, budgeting, savings tools that we have available here at First Alliance, visit our website at firstalliancecu.com. And until next time, stay financially empowered.